So hello everyone, we are Group 1 and here's a presentation about equity valuation. So here's a table of contents. So let's come to the first part, which is our watch list. So we have choose the 5 stock and let's come to the first stock. So the first stock is DHG. So DHG is known for Houyan Pharmaceutical Choice Stock Company, and there is pair established year is 1974, and their main business field are manufacturing and trading of pharmaceutical and so on, and they have been listed at the top 5 company with the largest market share in the Vietnamese pharmaceutical industry. And it has been on Ho Chi Minh Stock Exchange since 2006. So we choose this company for the two reasons. The first one is their steady growing revenue. Net revenue, pre-tax profit, net profit, and profit after tax had increased over the years, and their future perspective is really a good size to invest. So about the return and risk, so this company had a return of 1.79, which means that if we invest 1 billion VND in this stock, we will gain 0.01779 billion after a year. And but this is also have a very high risk, which equal to 26.68%. So the second one is the Bình Dương Water and Environment Corporation. So it is established in 1975, and their main business field are exploitation, treatment, and supply of clean water. And this day has been a choice stock company since 2016, and they has been on wholesale since July 2017. So we choose this the company for the two reasons. The first one is steadily growing revenue with a very high CAGR, which equal to 16.3 0.33%, which is higher than water industry average. And the second reason is their futures prospects. Um, this company has completed about 22% of their annual plan, and they is planning to expand their water supply ecosystem. And about the return and risk, they had a return of 8%, which means that if we invest 1 billion VND today, we will get an average profit of 0.08 billion VND in 1 year, and with a very high risk, which equal to 31%.
The next stock is FPT. The company was formerly known as the Corporation for Financing and Promoting Technology until changing its name to FPT Corporation in December 2008. FPT Corporation was founded in 1988 and is headquartered in Hanoi, Vietnam. Initially, it was a food technology company run by the National Institute of Technology. FPT was officially listed on the Ho Chi Minh City Stock Exchange on 13 December 2006. Over the 36 years, FPT has always affirmed its leading position in critical sectors including technology, telecommunications, and education, with 7 subsidiaries, five associates, and more than 48,000 employees covering all provinces in Vietnam, and are also available in 30 different countries. Catching up with the latest market trends and emerging technologies, FPT has developed the Made by FPT ecosystem of services, products, solutions, and platforms, which helps bring sustainable growth to organizations and businesses and also distinctive experiences to customers. We decided to choose FPT to our whitelist based on three main reasons. The first and second reason is that FPT's visited results show steady growth in revenue and profit in both IT services for foreign markets and domestic IT services and telecommunication services. The third reason is that FPT has great prospect and development strategy in the future. FPT is also entering a strategic partnership with NVIDIA DIA to develop artificial intelligence and cloud computing with an investment plan of 200 million USD to establish an AI factory. FPT's strategic focus for the 2024 to 2026 period including exploiting trends in AI, semiconductors, electric vehicles, digital transformation, and green transformation. The stock price of FPT increased, which led to a positive annual average return of 29.7%. This means that if our team invests 1 billion Vietnam dong in FPT stock now, we will earn an average of 0.297 billion Vietnam dong over the next year. When holding the FPT stock price, the investor also bear certain risks since FPT's annual return is expected to vary by 29% from the average return. With the standard deviation of 29%, FPT standard deviation is slightly higher than VN Index standard deviation of 9%. However, compared to other stocks in our portfolio, FPT stock has the lowest standard deviation. So that we can conclude that FPT stock is less risky. It can also be inferred that at an expected return of 29.7%, the real return can fluctuate from 9.7% to 49.7%. In next is Petro Vietnam Drilling and Well Service Corporation (PV Drilling). It was established in 2001 on the foundation of PTSC Offshore, a subsidiary of PTSC. PVD is a provider of integrated drilling services. The core business range comprises drilling and well services, mechanical repairs, manpower services, and spare parts trading. The company owns four jackup rigs, a tender assist drilling TAD rig, and a land rig that has a highly respectable safety record of zero lost time incidents. During 23 years of establishment and development, PVD has significantly developed and become one of PVN's leading subsidiaries and a prestigious drilling contractor in the local and regional markets. We chose PVD as a potential stock in our watchlist based on the first reason is that the rig leasing segment for PVD continues to show positive prospect. PVD's rig leasing contracts have secured drilling schedule for 2024, with some rigs already contracted until 2025. This stability allows PVD to reduce operating costs and improve gross profit margins. The day rates for jackup rigs in Southeast Asia are expected to remain high in 2024, with new contracts reaching over 1,000 USD per day. Additionally, the implementation of the Block B Ormond project chain is set to benefit PVD through the provision of well technical services. The company may also begin drilling wells in the later stages of the project starting in 2025, further enhancing its revenue streams. And the second reason is that PVD is set to accelerate investment and the prospect of its well technical services segment. The company plans to invest in additional drilling wells in the near future to capitalize on the favorable rig leasing market. The vibrant drilling campaigns by oil and gas contractors in 2024 are expected to ensure stable and continuous operations in the well service segment. Moreover, PVD aims to expand these services internationally to broaden its operational scope. And the last reason is that PVD's financial health remains stable until now. PVD presents an annual return of 15.7%, which is relatively high and indicative of strong performance and substantial profits and or capital gains for its investor. This means that if our team invests 1 billion Vietnam dong in FPT in a PVD stock now, we will earn an average of 0.157 billion Vietnam dong over the next year. However, this attractive return comes with a significant risk level of 46.9%, highlighting considerable variance and price fluctuations. While the potential for high returns is appealing, the high level of risk implies that the investment value could experience substantial short-term swings. This investment might be suitable for aggressive investors who are comfortable with high risk. Conversely, conservative investors may find the high variance unsettling and might prefer more stable investment opportunities, even if those offer lower returns. However, because our investment in principle is value investing, prioritizing high return, low risk, we did not choose PVD.
Mobile World Investment Corporation were operated under two distribution format that is Thế Di Động, meaning mobile world, and other one that is Điện Máy, which means the customer electronic. So the ecosystem is include and manage and operate major modern retail chain in Vietnam, including Thế Di Động and Điện Máy Xanh, sell mobile other electric product. Also, Bách Hóa Xanh control for grocery and FMCG chain, major chain that is total sale genus Apple product, Anchor Pharmacy, and other chains, retail chain. So altogether, MWG was a total Vietnam retail network of nearly 5,600 stores as the end of November 2023. The reason why we choose number MWG because 1% one of their business field have the positive side should be grow in the future. So Bách Hóa Xanh provide the total revenue sales per store continuously grow in each month is substantially in the involved volume sold in the supermarket and other chain. So despite the lose in several months before, it result significantly grow, and so we forecast that is will break even by the end of the year in the beginning or in the beginning 2024. So it also have the large markets to can be explored because Passport store is largely located in the southern and central province of Vietnam, but it still have room in the north. However, it's likely to be a long-term story because the current strategy into focus to the quality and the efficiency, not to expand their store very rapidly. So with a return rate at 10.67 and the rest 30.8%. The WG country with a small favorite, but small but favorite return rate for the performer of investment. But despite that very high to other holding, the return were acceptable. So with the annual risk or standard deviation of 30.8%, you should get they are comparatively relevant degree with the volatility in relation to other markets, or to the market. So increase in the fraction of their return history, inherently uncertainty and competitive pressure, but as well as possible variation in customer demand and prevailing economic condition quite promisingly to invest. And the other stock that's the Dafeng Group strong stock, DBQ. So Dafeng Group strong stock involved in the building and energy investment industry. So they online the work in the integration project, building urban infrastructure, bridge, road, sea embankment, and in addition, they also own real estate and hotel business and energy sector for the hydropower plant. Typhoon Group have opportunity in the Vietnam booming infrastructure and urbanization trend because that's the idea to persist in the to benefit from Vietnam rapidly expanding urbanization. Uh, we need we need infrastructure and development or constructor. That the advance to regulatory environment and government continue to invest to the public infrastructure project that one of the main field of Typhoon Group. Furthermore, the group have solid standing so by the stable profit over the year. They also have the positive side in the early result in the 2023. The revenue more than 3,000 billion Vietnam dong. It's have the revenue nearly balanced while the 41%. The hydropower have a little down of in the 2030 23, but in the first quarter of 2024, the revenue were increased. So with the return rate is 11.51% and the risk quite high than the over four groups, with 36.11%. So the full group deliver the reasonable return in annual rate, where schedule the company potential consider growth in the library industry. So that is the return rate, but come to a significant annual risk rate at 36.17% with emphasized high degree of volatility. So it's still the project risk and market trend is some of the current responsible for the high risk. Quite good to invest in.
MB Bank, established in 1994, is a Vietnam-based financial institution and also an enterprise directly under the Ministry of National Defense. In addition to banking services, military also engaged in security, broker services, fund management, real estate trading, insurance, debt management, and asset exploitation. So there are two main reasons why we choose MB Bank. Firstly, about long-term objective yield valuation. It has the largest scale of the total assets among private commercial banks with a competitive advantage and growth potential higher than the industry average. MB is now trading at about B divided B 1.28 times and estimate at around 1 in 2024, which is an attractive valuation for the bank with long-term return on assets of over 20%. Secondly, it's about the key growing momentum of MBB come from the credit growth. Due to the population structure change analyzed, there is a huge room for development in credit management. Currently, MB Bank has focused credits on retail consumer goods and other anti-epidemic industries such as electricity, apparel, healthcare, and logistics. This will lead to stable increase in the credit revenue of MB Bank in the near future. MB Bank is also expected that a favorable situation will ensure the growing return of its stock price. So now we move to the return and risk of MB Bank. The annual return of MB stock is very risky because the banking industry in which MBB is involved is very volatile due to interest rate, economic cycle, and other regulation. On average, MBB stock rate an annual return of 15.48%. This means that each day the investor invests 1 billion Vietnam dong in MBB stock. On average, the investor would obtain a profit of 0.141548 billion Vietnam dong after 1 year. and this seems to be a potential for growth. Despite the odds against them, a strong financial performance and market reason. This rate is higher than many stocks and signifies a put in by the investor that MBB will sell through all the complexity of the banking sector and continue to provide a healthy return. So now move to the next company is Phú Nhuận Jewelry Choice Stock Company. P&G established in 1988 is a leading enterprise with 50% market share in jewelry gemstone retailer industry in Vietnam. The company products mainly in gold, silver, and platinum jewelry. The retail channel is the backbone of P&G distribution system with 400 stores nationwide. So the reason why I choose this, firstly, it came from the growing jewelry demand, rising disposable income, and an expanding middle class region a significant growth opportunity for P&G. Secondly, it's about the jewelry retail maintain growth expectation of stable once perhaps jewelry retail benefit. Revenue from the jewelry retailing was excess of 6,300 billion Vietnam dong, which was up by 13% compared to the previous year. So it suggests that a stable gold price in the future will positively affect the jewelry retail. The revenue from the gold sale increased slightly due to the warming up of the gold markets, which have boosted the numbers of orders. So now we make a comment on the return and risk. Additionally, because the P&G has a beta of 1.95, suggesting that its stock price slightly less volatile than the overall market, the retail jewelry industry in which P&G operates experienced a moderate volatility due to factors such as consumer demand and fluctuation in gold price. Despite the challenges, the steady demand for high-quality jewelry and the company's strong market presence contribute to the P&G growth potential. This performance positions P&G favorably among investors, highlighting its resilience and robust standing in the retail jewelry sector.
The next one is Hoa Phat Group. Hoa Phat Group is one of the leading industrial conglomerates in Vietnam. It started as a company specializing in trading construction machinery in 1992 and has been expanded into various sectors such as furniture, steel pipes, refrigerations, real estates, and agriculture. By 2023, Hoa Phat is the largest steel producer in the Southeast Asia region. Their business philosophy is harmony for development, ensuring balanced interest among stakeholders and aiming for sustainable growth. So we chose Hoa Phat Group because of these two reasons. First is the global steel industry is projected to experience positive fluctuations. As of December 25th, 2023, international steel prices have shown positive movements. On the Delhi and Commodity Exchange, the price of iron ore for May 2024 delivery has also risen by 3%, indicating a vibrant and positive sentiment in the raw materials market. Second, Hoa Phat Steel Group reports a strong 2023 results, but the company's profitability has rebounded significantly, benefiting from reduced input cost and increased production capacity. Net profit in the third quarter surged to 2 trillion VND. Moreover, the company has made progress in reducing its debt burden, with a total debt falling to 58 trillion VND and a net debt to equity ratio of just 2.28 times. Here are some comments on the return and risk ratio. Okay, so on average, the Hoa Phat Group stock provides an annual return of 19.97%. This means that if today an investor invested 1 billion VND in the Hoa Phat Group stock, on average, the investor would obtain a profit of 0.1997 billion VND after 1 year. With this investment, the annual return of the Hoa Phat Group stock is considered quite risky, as it may deviate by 35.44% from the average in a year. The steel industry in which Hoa Phat Group operates is known for its cyclical nature, influenced by economic conditions, commodity prices, and government policies. Despite inherent volatility, Hoa Phat Group has demonstrated a strong track record and a dominant market position. This high return, coupled with its market leadership, suggests investor confidence in Hoa Phat Group's ability to navigate industry challenges and deliver consistent profitability. Next in our watch list is Vĩnh Hòa Corporations. Okay, so the predecessors of Vĩnh Hòa Corporations was Vĩnh Hòa Coal, established in 1997. In 2007, the company converted into a joint stock company with the name Vĩnh Hòa Corporation. So it is one of the leading gaseous processing and exporting companies in Vietnam. Vĩnh Hòa is a large-scale enterprise in the processing and export industry of the country. The company's products are eligible for export to many countries around the world, including the US and European countries. So reason number one why we chose it on our watch list is continually improve production capacity and close loop value change. So Vietnam Corporation owns almost entirely self-sufficient closed-loop value chain and is also the first enterprise in Vietnam to successfully produce collagen and gelatin from catfish can. In recent years, Vietnam Corporation has continuously invested in expansion and renovations of factories such as the feed mill, which went into operations in 2022, and so on. Also, we can see strong growth forecast for Vietnam's seafood sector. Vietnam's seafood industry is forecast to grow strongly by 20 to 30% this year, driven by the economy recovery and US and European policies restricting seafood imports from Russia. So Vietnam is one of the biggest beneficiaries of these changes, especially in US market, which accounts for approximately 40 to 50% of the company's export revenue. So the VDSC forecasts that Vietnam catfish exports to US will increase by at least 10% in 2024 in the latest developments. Our comment on the return and risk is, okay, but the return is 9.77% and the risk is 41.78%. The seafood industry is known for its volatility due to factors such as global economic conditions, climate change, and fluctuating market demands. Despite the changes, Vietnam Corporation has demonstrated resilience and growth potential by its consistent performance and market leadership. While the return may be lower compared to some other stocks, the lower risk profile could appeal to investors seeking more stable investment options in the seafood sector.
Now we move to the second part of our presentation about a portfolio selection. So to determine the 5 best stocks for our portfolio, we first load all 10 stocks on the risk return chart. The E-axis indicates stock annual average return, while the E-axis reflects the yearly average standard deviation. Risk. We follow our investment strategies of selecting stock with high return and low risk, since we feel it's the best scenarios for the stock and appropriate for long-term investment. We will also invest in a stock with more volatility if it has superior historical return when compared to other stocks on our watch list. Beyond the strategies, we decide to include FPT, HBG, and MBB in our portfolio. FPT is regarded as an exceptional case when it provides a high return while also being risky, like in the above-mentioned rare situation. Choosing HBG and MBB become easier when we can eliminate VSC, BVD, and DWG, which offer lower return and higher risk than HBG and MBB. DHG has a lowest volatility ratio when compared to other companies, and it also has the lowest returns, making it less attractive than BWE and MWG. So our team opted on BWE and MWG as a portfolio final choose stock, and now is the portfolio selection.
On the part that the portfolio and market analysis. The first one that is risk and return. After choosing the portfolio, we have calculate the investment portfolio with all of that. We have the annual average return of 17.15%, is higher than the market rate at 4.31%. So it is a remarkable achievement that may be most due to the outstanding return of two assets, that's the FPT and also the Hoa Phát Group. So FPT has generated impressive return, almost 30% of strong role in the technology and telecommunication sector. So similar to that, Hoa Phát Group was one of the stock bring back to 20%, owning the actual investment in region of high demand in the company and the position in steel industry.
So for the annual average risk standard deviation, our investment portfolio exhibits an annual average risk standard deviation of 30%, surpassing the market standard deviations of 20.19%. This elevated risk level is commensurate with a higher average annual return of 17.89%, underscoring to inherent risk-return trade-off central to our investment strategy. Furthermore, FPT Corporation has the lowest risk rate in our portfolio at 29.05% compared to the overall portfolio risk of 30%. This lower risk, together with the FPT's exceptional 29.7% in return, highlights the asset's reputations in our portfolio as a relatively secure yet successful performer. The higher risk rate in a portfolio highlights a significant profit in our investment portfolio, but it also fits with our objective of generating higher returns, evidenced by the strong performance of FPT and other important assets.
Okay, so let's come to the second part is systematic risk analysis. So here we calculate a systematic risk by using the slot function in Excel with the stock historical return at the first input and the market historical return via an index at the second input. Once we have the beta coefficients for the 5 stocks, we then multiply them with the weight of each stock, 20% for each, and sum them to find the beta coefficient for the portfolio. So here, after calculating, we have the beta coefficient of 0.94 for the FPT stock. So this index shows that FPT stock price is slightly less volatile and strongly correlated to the market trend. And if the market return are expected to increase by 100%, the return of this stock will increase by 93%. And large businesses such as FPT usually have better yield, one indicating that demand for their goods rises or falls in line with overall economic expansion or contraction. And so the next result is the Hua effect. So the beta coefficient of 1.24 shows that HPG stock is more volatile and strongly correlated to the market trend. So if the market increased by 100%, the return of this stock will increase by 114.9%. So the steel stock is quite risky for the investor, and the steel industry has high volatility compared to other sectors during the next few years. Raw material cost and the real estate market are the two factors that the steel industry will face in this year. And the third stock and the third beta coefficient is the MBB stock. So this index of 1.26 shows that MBB stock is more volatile and strongly correlated to the market trend. If the market return increased by 100%, the return of this stock will increase by 126%. The low interest rate environment in Vietnam may not maintain due to the impact of the high interest rate in the international environment, as well as fluctuation in exchange rate. So particularly for the banking industry, they have to face many specific challenges in this year. So this problem leads to pretty high volatility of stock in this field, making it quite risky for investors. And the next stock is the MWG. So the beta stock of 1.22 show that this stock is more volatile and strongly correlated to the market trend. A beta greater than 1 suggests that stock price tend to amplify the market movement. So if the market go up to 100%, we can expect this stock to grow up approximately 122%. So the last one is the BWE. So beta coefficient of 0.7 show that this stock is slightly less volatile and strongly correlated to the market trend. If the market return is expected to increase by 100%, this stock price will increase by 70%. So a beta less than 1 suggests that the stock tend to move in the same direction as the market, but less intensity. And BWE is a good company for many investors. According to the prospect of water supply industry, this is a safe industry and has potential for stable growth due to the increasing demand of clean water in daily life production in Vietnam.
In this session, we use Excel solver to compute the weight of each stock, which will reduce the portfolio variance or standard deviation. We determine that the minimum weight for each stock is 10% and the maximum weight is 40%. To compute the expected return, we use the sum product function. Next, we use the covariance matrix and the formula of SQRT MMULT function for calculating the standard deviation. Once we have the covariance matrix and the standard deviation cell formula, we launch Excel solver and start our portfolio optimization. We first set the objective to find the mean for the standard deviation cell that we have tied the formula by altering the weight of each stock. We also set 3 constants: the total of weights equal to 1, its weight is more than or equal to 10%, and less than or equal to 40%. Finally, we run solver to obtain the result. You can see my screen. And the portfolio's return now is computed and compared to the following scenario, assuming equal stock weighting at 30%. And we can easily see the result that the optimal weight of stock is FPT is 33%, HBG is 12%, MEB and MWG is 10%, and the last BWE is 34%. And when the risk is minimized, the return increases from 17.01% to 17.89%. And so that it can help us know how to allocate our investment most effectively. That's all our presentation. Thank you for listening.